We are moving on now to one of the big questions shaping this entire entertainment investment landscape. Is the explosive growth of AI startups a speculative bubble ready to burst, or are we still at the beginning of a long-term value creation cycle? To unpack this, we have three voices with deep experience in the early-stage AI investing. We've got Mattias Ljungman from Moonfire, Mason Sinclair from IQ Capital, and our moderator, Ángel García, who is founding partner at Necta Capital and one of the sharpest minds in the European VC scene. Please, welcome.
Hello. Well, you said Necta is Necta, just for people to know. Thank you, everybody, to be here to join us in this afternoon. The sessions after lunch are always difficult. We're going to try to make as much interesting as possible. So you see the title behind me, AI Bubble. So everybody's talking about AI these days. Some people is talking about the bubble, but I think that very few people is talking about the value that AI is generating. And the panel is about these three things, about do we have a bubble, it's AI generating value, and the perspective of two amazing investors that we have here today with us. It's great to having you here with us today. They just came from London, so they are very experienced investors in the space. First thing, probably to let the audience about you guys, Mason and Mattias. Very nice to have you guys. Tell us a little bit about you guys.
Perfect. Thank you for having us. It's wonderful to be here. It's a beautiful venue. So my background, I come from, founded Moonfire, which is an AI native fund that combines human expertise and the best of the machine to invest in pre-seed and seed companies really before the world takes notice. And I previously set up another fund called Atomico. Today it's a multi-billion-dollar fund, and had the pleasure and the opportunity to invest in some of the greatest founders in Europe, and to name 6 unicorn companies, and one was Supercell, another one was Klarna, but that's kind of my background.
Perfect.
Fantastic. Yeah, really great pleasure to be here, and nice to see you all. My name is Mason. I'm from a firm called IQ Capital based in London. My background's in electrical and computer engineering and biomedical engineering before I became a VC. But we're a specialized deep tech venture capital firm, investing at the early stage all across Europe, seed to about Series B. And that's spanning AI, robotics, semiconductors, quantum computing, generally IP-rich, research-based technology companies. But fantastic to be here. Looking forward to the discussions.
Perfect. Great. So let's start. I mean, I believe that we are in front of one of the fastest technology cycle product we have, at least I have ever seen about AI. I think things are moving faster than ever before. But at the same time, probably it's the biggest hype about the technology that ever seen before as well. So let's start broad. What are your takes about this kind of dual thing about technology can be change a lot of things and could be amazing, but at the same time, this kind of hype that we have? What's your first initial opinion?
To me, it's really, really hard because these are the kind of moments that we actually are redefining our whole economy. And so I think, to be able to go through that transition, we are probably overestimating in the early, stages of this kind of process or transformation, but underestimating over the long term. So I think this is the moment for us to create some of the most incredible companies. We are very much in the early innings. I think making predictions now is a little bit too early, and we can get into the data around that, which I'm happy to blab on about. But it's quite clear that we're probably going to see some of the most extraordinary companies being ever produced in the world. The biggest transformation we've ever seen. We are scaling up intelligence, which is probably the most powerful resource in the universe. Much bigger than what we did in the Industrial Revolution, where we were transforming labor. And in some areas, like robotics that we talked about, we're doing both. We're transforming both labor and intelligence at the same time. So, and some of these emerging technologies are actually coming closer to us, easier to be able to do and easier to be able to execute on. So as founders in the audience, I think you're actually some of the luckiest people because this is one of the most interesting times.
Yep, I mean, completely agree with that. I think we have this, no one can argue that AI is a structural shift in the technology market. But simultaneously with that, there's going to be a frothy layer above that while the market tries to figure out, what is going to be the durable, sustainable applications of the technology in the long term. But I think in the short term, it definitely creates a wealth of opportunities, not just in these AI companies themselves, but in reducing costs into simulation, enabling all sorts of other verticals.
And then what do you think? I mean, we are in a bubble, we are in a super cycle, we are something in the middle. I mean, as an investor, that every day you have to take decisions about to invest in a company and a set valuation, and you have to take decisions, and we know the valuation. It's a bubble, it's an amazing cycle.
Yeah, well, to me, I'm definitely in the super cycle angle. I am optimist by nature. I'm a venture capitalist, but I think the data is there too. I think it's very different from the internet age, right? So, if we look at, there is this issue of concentration, that I think we're worried about, and we're basically, a lot of investors are playing this power law, a lot of money going to a few companies. And if you, for example, in the US, I think they've doubled the amount of investment going into new companies. But if you take that away, take away 3 of those companies that got most of that investment, it's actually only growing by 18%. So it's a massive concentration. But I also think there's a really interesting opportunity because you're seeing, real investment going into the infrastructure, and there's about a requirement, they said, or the build, that they have said that they're going to, build out is going to be about $3 trillion into the factories, let's say, of AI. And to be able to achieve that, if you look at the numbers, you need to be able to see the inference, the actual use and compute of that, to grow at 9 to 12%. And actually, we're seeing it growing at more like 13 to 16%. So we're actually using more than what is being produced. So that is actually a really good indicator of us being actually in a good place. That might change, of course, as we invest even more. But then the other thing is there's a lot of cash in the system. There's 500 billion in the sort of big companies just sitting there. And on top of that, they're generating 300 billion per year.
Yeah, so, but every time that we have a new disruption, was internet in the 2000, was cloud computing later on, the world by default overinvests.
They did, yeah.
Because otherwise, things are not happening.
Yes.
The challenge, if we have a bubble or not, is what's the difference between this value that people is paying and this value that those companies are generating. I have an example, and I can provide some numbers to the audience. I mean, we are investors in a company in the US. Last year, they start having 100 million in revenues. By the end of the year, they have 1 billion in revenues. Today, 11 months after, they are in 9 billion revenues. And the company have moved from 50 billion valuation to almost 200 million valuation. So meaning from 100 or 1 billion, 50 billion valuation to 9 billion, 180 or 200 billion valuation. Is this a bubble? What's your take on that?
I think my view is that we're somewhere in between. So like I was saying, there's no doubt that we've had very clear breakthroughs. We're getting adoption on a mass scale, and it's certainly going to be a durable shift in the market. But I do think there's that frothy layer on top of it, where you start getting these kinds of valuations. And I think in the next couple of years, you're probably going to see a bit of a shakeout of some of the companies that don't fulfill the ultimate promise. But simultaneously, you'll see... But simultaneously, you'll see the truly transformative AI companies growing at an extremely rapid rate and generating a huge amount of enterprise value.
But I mean, we should never forget, though, the amount of revenue that you're talking about, that's real revenue. When we talked about bubbles before in the internet, there was no revenue whatsoever, right? You're kind of like, and in the best case scenario, you only had circular revenue. Revenue where, for example, in 99, you sort of had Yahoo, which was getting loads of money. they were generating revenue because other VCs were investing in other companies which were advertising on Yahoo. And once the VCs stopped putting financing into those companies, there's no revenue in Yahoo. Whereas today, actually, the people that are, or the companies that are using this is across the board. You know, again, like if you go back in those days, the top 10 biggest companies, there wasn't a single tech company up there. You know, it was banks and it was oil companies. Today, the top 10 are actually tech companies that are generating vast amounts of cash. And so Google, who's investing $90 billion into their offering in AI, you know, they're actually increased their market cap by $1 trillion. Okay, fine, it's value increase. But even like you say, it's revenue. And like what we're seeing too in these young companies, where you have companies like Lovable that, you know, within 12 months are making over 100 million in revenue. I think it's 180 million they ended up doing. You know, it's insane in terms of the revenue growth. We have never seen that kind of trajectory. And then you can sit and you can say,
20 people.
Sorry?
And 20 people.
Yeah, exactly. So like, and then you know, like, I think we should always question. I think it's good. It's a human intuition to say, hey, wait, is this continue to be possible? But the reality is, I think actually the fundamentals are there right now. They might not be there in 12 months' time as this continues to ramp up. But that's part of the process, like you say.
So investors are saying that we don't have a bubble. This is what they are saying. Okay? Someone told me, an investor told me 1 month ago that the main challenge for an investor in the current AI fast change evolution is that today we might be investing in a company that is killing one of our portfolio companies. But it's even worse than that. And we might be investing today in a company that in 3 years from now might be killed by another portfolio company. I think in order to avoid that, it's extremely important, I think, I'm thinking about the audience right now, that when you are choosing an investor to invest in your AI-related company, they have to be skilled in the art, understanding very well the kind of technology they are investing in order to avoid these false investment decisions, right? Because understanding today in this, again, really fast environment changing is extremely important. How you are dealing with that, or what are your recommendations about people trying to set up companies in AI? What are the modes? What are the things that they have to take into account? Because things are changing so fast that an amazing idea today could be worth nothing tomorrow.
I'm happy to jump in.
Yeah, go.
I mean, I think that's part of the business that we're in, right? We're in the business of investing in some things that might not work out. And it might be right for all the right reasons at that moment in time. It might be the right founder. It might be the right attack on the market. But then ultimately, the world changes in front of us. And that's just the nature of it. I do, and I want to attack two different parts of that question as well, because you talked a little bit about moats. But I also wanted to talk about the thing of, you know, because you insinuated around pivoting and changing and needing to be adaptable. And I think, to me, this is also a moment which is kind of revenge of the nerds. I think if you went back a couple of years ago, maybe even 3-4 years ago, you actually didn't need to be, you know, hardcore technical to build businesses. Today, if you're building, you know, let's say it was kind of like marketplaces and those kind of related types of businesses. Today, it's actually all about the technology. So to me, the people who are technical, the ones who really understand what what is happening, that's transition, and they're spending the energy, time, and have the capacity and the competency, they're the ones who are going to be able to evolve as the market evolves, because they see the change. They're like, okay, great, I know what to do next. I'm going to build it out. And then when it comes to the moats, you know, to me, moats are earned. You know, they're not just declared. And I think a lot of people believe it's like, oh, declared, I have a moat. I have a data moat. And actually, I've never believed in a data moat. I think people have been talking about data moats since it's kind of social networks, right? But to me, you know, really, if you think about moats, there's still the same moats that we had in the past. It's about how do you build those network effects? How do you do counter-positioning? You know, scale economies, you know, also branding, and so on. Those are still really important. But I do think there is a new moat as well. And I think this new moat within the AI world and in the world that we're in now is your ability to execute at speed is really powerful, because I think speed is going to be valued more than capital. I think a lot of people are worried about the capital in the market. I would say for really smart technical founders, it's going to be about speed. And I actually think, sorry, yeah.
No, this is extremely important, I think, for the audience. I mean, what you are saying is how you prevent your company or your technology to be out of the market in few years or in few months from now. How you have to build this.
Yeah.
So what you are saying is that it's nothing by definition that you have to build your, but I think it's important for the audience to understand some examples about when you are building an AI-related company, technology is going to change, technology is going to be better in 6 months from now, it's going to be amazingly better in 1 year from now.
Yeah.
What you can do in order to protect your product, your technology against these.
Yeah, and I mean, from my perspective, it's in the AI sense, I think novel models themselves offer little to no defensibility. The market's changing very quickly. On the data mode side, also largely agree, but I think there are certain instances where you can get strong data moats and flywheel effects. And I think we're seeing that, for instance, in physical AI. You know, you're seeing a lot of labs, automated systems generating their own proprietary data sets. That does give them a kind of compounding advantage. But I think these data moats, it's important to understand they're not a moat, but you can just extend the time frame to get ahead of competitors. And extending that can be the difference between life or death, or being outcompeted in the market. But I mean, outside of that, it's and not unique to AI is just all the kind of traditional ways that software companies create.
Any example about the moat, significant moat in any company that you have invested that came to your mind right now?
I mean, I personally, you know, sometimes it's, you know, like it's an awesome product that, like I say, ultimately ends up building network effects. It ends up building also a kind of counter positioning or something different. I mean, you know, to me, you know, it's always amazing to be in businesses that almost have their own propulsion, and it's actually hard to see anybody being able to compete. I don't think you can sort of, like I say, just declare and say, okay, we have this moat, it's a unique moat. I actually would even contradict, you know, push back on this data moat thing, because yeah, maybe some of those companies in robotics are building this data moat, but they have to say that almost, right? But then you're thinking like, you know, what if somebody comes up with a new version of it? You know, what if somebody else decides that they're actually better at simulation, and so your whole way of building those data moats are then undermined completely. So to me, if you're thinking about moats, it's really the system that generates them that's going to be more important than actually the moat itself. If you know what I mean? That you actually have a system that's robust. So, you know, like I think, in a sense, network effects is an amazing, you know, because the more customers you get, the stronger the proposition becomes. And it's almost like I say, it's the system
but
itself.
Mattias, everybody believes when they are building their company that the system is very robust, right? So how you can guarantee that the system is, what are the things that helps you as an investor understand that this system, this product is robust and will stay there for a long period of time?
I mean, to me, again, it's like I think it's pretty unique. I don't think it's like, okay, because if it was that simple,
yeah,
everybody can be an linear equation, everybody would be doing it, right? And then it's like it's easy. Now the point is that you're building up these constituents that then becomes actually hard for any specific within a category to replicate. You know, you know, and I think we can look at some of the great companies that we have around the world, and actually that's what they've been able to forge. And that's what you as founders need to go out there and build. And like I said, I think actually it doesn't always take tons of capital to do it. It's not clear it's a winner-takes-all market. And actually, there's probably less competition than what you think, depending on your angle and your ability to crack that nut.
Agree.
And I think, I mean, you used the word guarantee. I don't think that exists.
Yeah.
There's absolutely no guarantee. But and it goes back to your point about speed of execution in a lot of instances as well. I mean, if you can launch your technology and very deeply embed into the workflows, create high switching costs for companies, you know, these are very strong forces of defensibility outside of data and these kinds of things. But it's a matter of speed of execution and relentless speed of execution to stay ahead. Because like I said, whatever moat you create is likely temporary in nature. It's just how big of a time gap can you create until you reach a critical mass where the speed is too much for competitors to keep up.
I mean, again, we're obviously singing from the same hymn sheet here, because I think that allows you to just, when you're seeing, the market change, if you're small, nimble, and able to really understand your customer, like, okay, look, we then need to make this change, and we need to sort of deploy as much resources as we can to be able to do it, then you're more likely to then build something that's even more powerful. So speed is probably the one quality that we look for and can say that is special.
You said before that never been a better time to be a founder, or something like that, which I agree. The kind of founders that you are looking for has changed over the last years, or remain the same kind of people? I mean, how the access to technology, because today technology is creating technology. Maybe we don't need so sophisticated tech guys, or maybe yes. What kind of founder are you looking for?
I mean, look, I've been working in venture for 25 years, and so I've been thinking about these things for a long time, having worked with lots of different types of founders. I think really this technical edge has, since the founding of Moonfire, has been always something I've been leaning in more and more to. But I think it is more important today than it was in the past. Because I think the opportunity is larger, the technical requirement is bigger, and the cost of development, like I said, is lower.
And I think, I mean, from my perspective, but it's slightly different as a specialist deep tech investor. Obviously, the technologies that we back are generally rooted in years of research spun out of universities, academic institutes, research institutes. So we need someone that has a unique insight on those technologies. But that in itself is not enough. So you need to kind of pair that with a thorough understanding of the value proposition and the customers as well. Yeah. And I think what's becoming more and more important is the ability to kind of tell that story, particularly in a deep tech company where R&D cycles are extended. Milestones aren't as clear as to what's going to unlock the next round of funding for you. And it's the ability to kind of rally the market, rally your customers around the unique strengths of your particular technology. And those companies tend to come out on top. So it's this combination of deep technical understanding, tightly integrating that into a value proposition closely with your customers, and the ability to have an overarching storytelling capability to rally talent in the industry around what you're building. I think that to me, those are the three kind of key components that make for a successful founding management team. Okay,
this is now we have the kind of founder that we are looking for. What would be one piece or two pieces of advice for those founders building right now AI companies? I mean, what are the things that they have to pay more attention? What are the challenges that they are going to face? What are the things that you are seeing in your portfolio companies about that?
I think it's the best time ever to be a builder. I don't want to repeat again because I think I've said it a couple of times, but I think it's a really good moment. And I think it's really about one of the things that I would think about as a founder today is that, the depth of technology capacity and competency in Europe is very deep. We produce 3 to 4 times more PhDs or STEMs in the STEM space than the US does. The cost of those are much, much lower, about more than half. You have the ability to build excellent teams, excellent talent, in a market that's going to reward you highly for that. And so to me, lean into those capabilities, that you're actually going to have a good cost base, a very capable team, and from day one, think global. This is not about best in Spain or best in Europe. This is about taking your product immediately, looking at the global market, and actually, you should be seeing and this is a little bit counter what the world is talking about. I think Europe likes to talk about, but the path is ultimately going to be landing in the Silicon Valley in some sort of way. Because what you want to do is allow yourself to take on that global competition from day one. To be that player that and your confidence to be able to play at that level. I've seen European founders be able to do it again and again, and what I would say is just go and lean into that.
Yeah, but you're saying cost in Europe is much more affordable.
Yeah.
How you can retain an engineer in Europe making half of the money that they can make in the US?
Well, they're not all going to the US, by the way. I think we always underestimate what a wonderful place Europe is. We just had an amazing lunch around the corner. It cost me 25 euros, which would have cost you, I don't know, $75 easy. I mean, I go to San Francisco and I try to get like a avocado on toast and for breakfast, and it's like $50. It's an expensive place to live.
That's why they are paying so much.
And it's 18 to 20 degrees outside, so it's not like we're anywhere off. You know what I mean? So I think there's a lot of I'm not like, you can go there and get higher paid, and actually you'll get the equity to allow you to get the benefit that, to be honest, you're going to keep yourself and probably generations of your children and grandchildren happy too if you end up building a great company. So I absolutely think you can, as engineering teams, they can stay here. But if they wanted to go there and they want to make double the money, by the way, the taxes in California are no lower than they are here, so but the opportunity is huge. So try it out.
And I think it's also worth just noting how much the European ecosystem has matured, even over the last kind of 5 years.
Yeah.
I think we're seeing a new wave of kind of repeat founders. We have some scaled companies. There's just an institutional know-how.
Yeah.
And alongside that, the capital markets have matured significantly. Fund sizes have grown dramatically. So there is a lot of momentum in Europe. And I think that's going to result in better funded companies. You can kind of mitigate the pay gap to a certain extent. It's not going to be the same as West Coast.
Yeah.
We are missing the U.S. investor here to
yeah. And I mean,
well, they're saying the same thing, by the way, because they're investing here in Europe as well. So
yeah. And I mean, if you look at these companies, I mean, the retention rate of top talent is high.
Yeah.
At least from all of the portfolio that I work with and see. These people are mission driven. They bought into the ideas. And retention is high, despite the differentials in pay. That temptation obviously exists, and it's something that European companies have to contend with. But I don't think it's as big of a problem as public sentiment would suggest.
Yeah.
But the important thing is for the founders. Like I say, you asked about that. It is actually a great place to build because, it has capital efficiency. Incredible, and again, technology competency. So if you can do those two things, it's like it makes it easier for everybody in the room to get capital, and you can do more with it. That's the message that I wanted to get.
But the challenge is that someone told me that the average salary for a 3-4 years experience engineer in the US is $400,000 a year. I don't think that any European engineer 2-3 years experience is going to make that.
Absolutely.
So,
but the direct
this is one of the challenges.
Corollary to that is if you're having to pay people that much and you raise a $4 million round, that's
no. The challenge is to retain them. The challenge is that the best ones, they're going to cross the Atlantic, and we are losing this kind of.
Well, I think that's right. And you know what? That's how the market works.
Yeah.
I think it's absolutely fine, because a lot of them, look back and come back after a few years, build here as well. The data also shows, actually, that many of these, even if you look at PhDs or academics, the flood of academics coming from the US is actually quite high. I think it's gone up 10x in this last year. So yes, there's movement, and there are people who have movement. I think it's fantastic. Take advantage, go build. But you can also do it here.
And we are lucky that nowadays it's not so easy to get a US visa.
It's almost, so I don't think we have to worry about it.
Let's wrap up. Maybe one final contrarian question. What are your contrarian predictions about AI for the next 2-3 years that if you say so now, everybody's going to disagree with you? It's a complex question that requires a complex mind.
Do you want to kick it off?
I mean, again, I think maybe if we look at the foundation models, I think everybody said that it's done. It's, you know, this market is finished. There's no point getting into it. It was really exciting to see how China kind of reversed that trend and used open source and used the hive mind, you could say, to be able to build something with 150 people, you know, with a lot less capital, and be able to take on the best. And so what I would say, it's possible for anybody out there who actually has some unique insight to then actually build something that can expand the capability of that intelligence layer that we're ultimately building.
So what you're saying is that we don't really need so much money to build amazing AI companies.
I think that's right. I think actually I think obviously you have to work with caution with the hundreds of billions going out there, but the reality is 150 people helped create Anthropic. Actually, 150 people ended up creating OpenAI. And if you look at China, even despite all the money going into the US, they were able to build things at a much cheaper price. So I think we will get that wrong. We will be able to find a new way. And this is what the wonderful thing about innovation is that we find things that we didn't expect.
Mm-hmm. Yeah, and I think I'd agree with that. And
you have to disagree.
But here's the caveat where I disagree with it. Yeah. I think on the foundational model side of things, I think there is room for that, but it has to have a very unique take. Yeah. You know, if you compare it to kind of you know, cloud infrastructure, no one's going to be funding the AWS Challenger unless they're doing a completely new thing. But I think there is a space for new foundational models in a post-transformer architectures. Mm-hmm. But the caveat being it's still going to be an extraordinarily capital-intensive business to build.
At the end of the day.
At the end of the day. Yeah. But where I do think the opportunity is that I think that the spotlight's going to shift slightly away from these kind of big generalist models, and you're going to start seeing lightweight specialist models, and that the system's going to become a lot more distributed as people start to kind of focus on cost-effective, security and privacy-focused AI deployments. And I think that opens up a big raft of opportunity for entrepreneurs in the short term. And I think we'll see that shift happening in the next couple of years.
My contrarian view that I don't know if everybody would disagree. My prediction is that in 3 years from now, the moderator will be an AI. Thank you very much for being here today. Thank you.